Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Monday morning pre-market webcast. Okay, so Friday, Friday's just one of those classic holiday trading day melt-ups. I mean, we just, there was really nothing to hold it down, and so we just went on up. We've now done from 1340 quarter all the way up to 1407 half in the span of, you could say the span of 6 trading days, but the reality is, with the holiday and everything, it's been about 4 or 5 solid trading days, and we've gone essentially straight up. That move is due for a rest. And the one thing I was looking at on Friday, and the one thing I'm looking at today, is this descending trend line. It descends from the second lower high that we made on October the 18th through the high of November 7. And I'll zoom in a bit. And essentially, it's coming right up into this area. We didn't touch it on Friday. That would have been about a move to 1410, 1411. And there's still some potential, to still go up and touch that. But I really am seeing the bulls being a little bit tired in this market. I think we need to test at least the middle Bollinger Band here at 1389. Maybe a little bit deeper test back down to 1373, down at the 200-day exponential moving average. But in the big picture, you've got the moving averages now starting to scramble up, whereas they were nice, perfect rainbows before. Now we're getting that spaghetti scrambled kind of a look to them. But the bears, once again, have had another chance. And they were able to push it down below the lower Bollinger Band, but what they were not able to do was utilize the 200-day as a resistance point. And that equally applies for whether you're talking about the exponential moving average, simple moving average, wherever you put the 200-day on your charts, the bears didn't hold it. So now the advantage is to the bulls. And what the bulls need to do, even if they are stopped by this trend line, is make a higher low to continue to demonstrate, as they did on the 20th of November, that the 200-day wants to be support, make a higher low, and then start taking out these highs. Because as it stands now, you got the 68, and you've got 1, 2, 3, and potentially 4 lower highs. So this week is a pretty significant week. It's a week where the bulls can make a higher low and potentially break out of above the 1410 level and make a run up at that upper Bollinger Band up at 1430. It's also a week where the bears can reassert themselves now that everybody's back from the holiday, get back below the 200-day exponential moving average, use this descending trend line as resistance, and try to make some lows. If I had to, if I had to pick a side, I would pick the bullish side, simply because now the bulls, for the moment, have Washington D.C. on their side. Everybody is still remembering that press conference that happened on Friday where we bottomed out, and until something different comes out of Washington, something that indicates that the fiscal cliff is not going to be averted, the advantage, from my perspective, is to the bulls. From a pivot perspective today, you've got the daily pivot sitting right around 1400. We've been edging up against it all morning and through the Globex at night. Down at 1392, 1393, you've got the convergence of the 20-day. You got the 20-day pivot. You got the 20-day moving average underneath. If we do sell off today, I expect the 92, 93 level to be support. And if we go up off of the open, I'm looking at essentially 1408 to 1410 as an area of resistance or potential exhaustion. No economic news today. Heavy economic calendar this week, just nothing today. All right, everybody have a fantastic Monday. Mike Vacchi, Princeton Trader from Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade 'em well.